Hey, hey, hey.
Hi.
Where the money reside? Where the money reside?
We
What's
have
happening?
money bags being dropped in the chat because everybody is ready to go where the money resides.
I see it.
And specifically today, hi, we are not playing no games. So for y'all who just popped in, drop some money bags in the chat if you guys are ready to go where the money resides. Hey, FYBU student, y'all need to join the Fire University. It's
Okay.
really good up. I'm going to talk about that in just a bit, but Michelle knows what's up, y'all. We had a crazy week of classes last week. It was amazing. So Fire Your Boss University, just real quick, is me, Sierra, and Trishana's baby, basically. It's a university where we're going to be teaching you guys in a monthly membership everything you need to fire your boss, but really actually to be successful in your business, right? It's more about, hey, alum, yes. It's more about, giving you the tools to become your own boss and stay your own boss, right? Because some people, you can still get to the bag while you have a job, but the point is, we don't want you guys to shy away from having a business. We want you to know exactly how to thrive in your business. So that's all I'm going to say about Fire Your Boss University until later. What is up, Michelle? Thank you for popping in.
What's going on? I appreciate you. I appreciate the opportunity. So love everything you're doing. Been a fan.
Thank
I'm
you.
I'm actually a Fire Your Boss alumni too. Like I purchased the course. My first webinar, y'all. I'm like, listen, like literally, I'm such a fan of you three. You guys are so powerful. You guys are so
Thank you.
incredible, and the amount of success financially, what you guys are doing with your communities, it's just like it's unbelievable. I've never seen anything like this. Like it's mind-boggling. So yeah, I loved it. I got so much game, especially from Ellie. Like I'm the CPN. I'm gonna tell you all about myself or whatever, but like there's a lot of things that I didn't personally know about business credit. Ellie was just in there giving you like game, talking about like this back to back, just really killing them
The game.
with the game, and it's
That's
real.
what I do.
It's real out here. So no, definitely appreciate you for sure.
It is super exciting, y'all. Yeah, it's just great, like the power of Instagram linking up. What I need you guys to also do right now, because I want to make sure everybody who needs this live gets this information. So I need you to just press that little arrow and share this with like 5 or 10 people. Just click on some names in your DM list and share it with them. Anybody who needs to get to where the money resides, anybody who has questions about taxes, business, all of that, just go ahead and share that with them so we can get some more people in here, because I don't know if we're going to save this live. I don't know. We got to see how many gems get dropped.
Right.
We got to see how many gems get dropped. So do you guys have your notebooks? Let me see you drop the notebook emoji. Okay, this one, taking notes. If you guys brought your notebooks and you're ready to write stuff down, let me see you guys drop that, because I want to make sure y'all are fully ready to receive everything that's about to be given. Okay, I have my notes, and Michelle is my friend, but I always take notes. Okay. Okay, good. We got notebooks. Good. I'm so glad.
I'm gonna get mine too. Here we go.
I'm so glad. Yeah, there we go. See, we're exchanging gems. So Michelle, introduce yourself really quick, just in case people don't know who you are. Tell us about you.
Yes. So my name is Michel Valbrun, aka Money Making Mitch. I am a certified public accountant, tax strategist, and award-winning author of the book Prolific Profit: How Successful Businesses Maximize Profits Dominate the Market. That's actually it right. Yeah, right on the top corner. It's actually inspired by the late and great Nipsey Hussle. I don't even think I shared this story on the live or when we did the webinar, but I was actually out in LA for a conference, and I was a big Nipsey fan. I enjoyed his music, enjoyed what he was representing mostly. You know what I mean? Like just his spirit and his focus on buying back the block and entrepreneurship. So I pull up, to the spot. I'm trying to go to the Marathon clothing store. It's closed up. They got it, taped up and everything. So I'm just like, oh man. Well, they told me that he actually has a mural, and it was actually the day of his birthday too. That's how the timing, it was incredible. It was on his birthday. Went to the back, went to the mural, and I'm looking up at it. You know, I'm thinking about him and his music, and I look up and I see the word prolific tatted on his right tatted on his right eyebrow.
Right there.
That word is just like, that word prolific was just like, it's so powerful, and it really resonated with me. It touched my heart, and I was just like, and I kind of felt like something told me like to go, like just do it, because I've been thinking, yeah, I've been thinking about writing the book for a long time, and just like thinking, reflecting back on him and what he was able to do with his, you know, his short life, and it just pushed me and inspired me. It's like, really get on it, put this information. I wrote Prolific Profit, and it's been incredible. You know, I truly, you know, I shout him out in the book. I talk a little bit about my life and accounting and taxes, but, you know, it's really, I think probably as far as like business books and accounting and taxes or whatever, I don't think there's ever been a book, and I read a lot of books. Like, I got a whole bookshelf.
Right, you're the first.
Yeah, it's like, for someone to actually take it down and break it down for us, and you'll see too, guys, like I come up with the creative ways to give gems of knowledge and information.
Yes.
I love that. Yeah, that's the story with that book, and it's been doing great. I dropped it January 2020, which is MLK Day. So it was powerful. Yeah, there's a lot of meaning behind it. The book is blue again. You know what I'm saying? If you know, you know. Nipsey.
If you know, you know.
If you know, you know. So that's what it is. And yeah, it's but besides that, yeah, been featured on a whole bunch of things. I'm a writing contributor for Entrepreneur Magazine. Actually released an article in December sharing different year-end tax planning strategies. Because really our main focus and what we do is we help entrepreneurs, business owners, investors save $10,000 to $100,000 in taxes legally and ethically, show them where the money resides, and that's what we're doing.
Yes. And the book, for everyone who's asking, is called Prolific Profits.
Yeah, Prolific.
I'm about to write it now in the comments, but it's called Prolific Profits. It's super dope. Yes, y'all, go cop that. It's in your bio, right? On the link in your bio.
Yep. In the link in my bio. I got and also, yep, it's in there. So you can pick it up at prolificprofit.com, amazon.com, and there's an audiobook for it too. So I went all the way. I didn't go halfway. I really wanted to make sure people got this information. So there's an audiobook too. Yeah.
So I have a question for you, a couple questions. So when you talk about your taxes, you always say like you help people save money on taxes legally and ethically, right? And I love that. That's like your tagline. So like, what does that mean, right? How can people save on taxes this season legally and ethically? You know, what does that mean? How can they do that?
Yeah, that's a great question. And I don't think anyone has really asked me specifically on that legally and ethically part. So another thing too, and I actually talk about this in the book. This is not about the book tonight, but you know, the book there's so many concepts and things that we have to relate to the book. And the book actually have this chapter in there. I didn't even share this on the Fire Your Boss. So if you guys who are on the Fire Your Boss, you guys get some new exclusive information. So yeah, I shared this story in my book, true life story. When I was 8 years old, I was living in Miami, Florida, and you know, I'm at home waiting for my mom to get home. Long story short, I hear my mom come in. I run to the door and I look at her, and there's like a gun pointed at her head. Yeah, this is like serious business, right? Gun pointed at her head. Long story short, it was a group of men. They came to burglarize, rob us, whatever the case is. Laying down on the floor at 8 years old, going through this very, very traumatic experience. And, you know, they ended up coming in, taking some money from us. They leave. So when I say, yeah, legally and ethically, like to me, you know, that means so much. And like, I'm really like glossing over, like I talk about it in like vivid detail in the book, but like, it's real. Like, so for me, when I was 8 years old, I made a decision in my head. At that moment, I was just like, yo, whenever I grow up, whenever I start making money, I want to make sure I do things legally, ethically. That's like the cornerstone of what I do, because, you know, I've experienced being on the other side of that when people are out here, you know what I mean? Like, and I get it, you got to make money. So you know, I understand it, you know, desperate times, desperate measures or whatever the case is. But like, there's just too many ways to get money. And that's what you guys teach in Fire Your Boss. There's like a million
So
ways to do things
many.
legally. So like, and the same thing with the tax code. The tax code, if you were to print out the tax code, there's over 74,000 pages in the tax code. And the majority of the tax code, believe it or not, shows you legally, ethically, how to save money on taxes. So
Write that down, you guys. Please
yeah,
write that down. There's over 74,000, right? 74,000 pages in the tax code. And they explain to you how to essentially not pay taxes, right?
yeah. A small part of the tax code is telling you, okay, well, these are all, this is a list of everything that's considered income. Everything you got to pay money for. Now, the rest of this is telling you how you don't have to spend that money. All right. Yeah. So really, when it comes to taxes, there's 6 big ways to save on taxes. So one of the big ways is maximizing deductions. So even taking a step back, one of the things with taxes is, you know, the government, the purpose of taxes is for the government to generate revenue, use money as use the money and spend it throughout the country however they seem fit, right? Mm-hmm. So one of the things that they realized over time is that people change their behaviors once they tax them on certain things. And once they peep that game, they're like, okay, so if we tax them on this thing, less people are going to do that. If we don't tax them on this thing, more people are going to do that. So one of the things that the IRS does is a lot of the rules and regulations and things in the tax code is centered around business owners and investors. The IRS favors business owners and investors because they're doing things that the government likes. Business owners are employing people. They're creating commerce. They're, you know, generating wealth and doing all of this other amazing things. Like as an entrepreneur, as a business owner, doing great things. W-2 people, amazing people. You guys are killing it too. Providing a huge benefit to society. But the government prefers businesses because it's scalable. It's bigger and it's more countries, creating a bigger impact. And then two, boom, they could potentially collect more taxes from them, from payroll and stuff like that. So that's number one. Investors too. They want people to invest in the country because as an investor, either you're investing in a company, a corporation, you're putting money into Amazon and you're blowing that up so Jeff Bezos can be a quadruple billion trillionaire out here. But because so many people are investing in that company, we have the benefits of 2 days free shipping and all that other stuff and all, you know. Yeah, and all the other benefits of Amazon, right? So they want people to invest in businesses. I also want people to be investors in, well, as real estate, because as a real estate investor, you are providing housing for the public, because you see how like the government has all these programs, you know, these housing programs and all these subsidies and all that stuff. The government doesn't want to do that. They rather have the country do that, people in the country do that, and they're like, okay, if you guys are gonna go ahead and take some of this load off for us, then we're going to give you some tax breaks. We're gonna give you some leniency on those different things. So that is.
This is so dope. Like, y'all, I just took notes, and literally, like, Michel is my friend, but I always learn something new from him every single time we talk. So there's a couple things I want you guys to really take note on from what he said, right? So 6 ways to save on taxes is what he started with, but the main takeaways I had were that is through maximizing your deductions. So you need to write that down, and truly being a business owner, right? Okay, so he mentioned that the tax code, the government, all of it favors business owners. So our W-2 people, listen, I've been on W-2 before, like, we know we all have to go there, but it doesn't mean, don't let the fact that you're on a W-2 stop you from owning a business, right? You can do both, right? You can be in tandem having a W-2 and still have your 2 or 3 LLCs popping. Would you recommend that for people?
100%. Like, this is the thing. So not only do you get an amazing tax benefit, and you guys do an amazing job talking about this in the program, but it's like, it's literally the best way to create wealth for yourself. Generational wealth. There's just so many great things with being an entrepreneur, business owner. And Shoshana, she wrote down this amazing list of like 20 or I don't know how many. She wrote a lot of jobs that you can create under $600. So a lot of people, when they hear about business, when they hear about entrepreneurship, they hear that 90% of businesses fail within the first 10 years and all this other foolishness, right? Um, a fun fact about that is, you know why they say 90% of businesses fail?
Why?
Because everyone's showing losses on their business for taxes.
Oh,
That's where they get that statistic. So
I never thought about that.
that's where they get that statistic from. So you see people who because a lot of times people, when they first start their business, you have a loss. But a lot of times people use their business and they have a loss, and some people are a little bit more aggressive than others, as it shows reports are showing a loss. So they're looking at that and they're like, oh well, most businesses are showing a loss. So that's what it is. But like I said, it's really not that difficult to start a business. Doesn't cost that much, and it's really not as complicated as people may think. So do not be intimidated by it. It's an amazing way to create generational wealth. You can't pass on, and you guys talk about this, you guys can't pass on your job to your children. You know what I mean? And as a business owner, as an entrepreneur, you can go ahead and pass those things on to your children. You can actually pay your children through the business, which is probably one thing we're going to get into tonight.
Yeah.
But that's key. That's huge. So yes, making sure that you go ahead and take advantage of that. So that was one. So we just talked about one. Well, we didn't even get into the number one. Number one, maximizing deductions. Boom. So maximizing deduction. What's a deduction? What qualifies for deduction? So deduction is pretty much a reduction in your taxable income. So as an entrepreneur, let's say you're an LLC, sole proprietorship. We're going to talk about what that means if you're not familiar with that. Let's say you're LLC, sole proprietorship. You're going to fill out what's called a Schedule C. On that Schedule C, you're going to have your income. Then you're going to have all your expenses. Your expenses are essentially your deductions for your business, right?
Yeah.
And as it relates to everyone, so this business owners and W-2 workers, you have a standard deduction and you have an itemized deduction. So that's one thing to point out too. So on your personal return, you have the standard deduction. That's $12,400 in 2020, $12,550 for this coming tax year 2021. So they increased it. Yes. So yeah. So they increased.
No, that's good to know.
Yeah. So they increased it. But that's an automatic deduction that you get. On the other side, and I just posted this today, you have itemized deductions, okay? So itemized deductions are going to be pretty much the main categories of itemized deductions are taxes you pay in the year, medical and dental expenses, gifts to charity, those kind of things. You add those numbers up, taxes you pay like for your for your home, etc. You add those up. If they're more than your standard deduction, then you can go ahead and take advantage of the itemized deductions. That's deduction for the personal side. So going back to business, I want to make sure I still continue to tap into people who are not yet business owners.
Yeah.
So on the business side, there's 4 requirements in order to be able to write things off, take a deduction. All right. So the 4 requirements are what I call tax-free. All right. So they're called tax-free requirements. I created an acronym. I'm huge on acronyms. It helps me memorize things. It helps me remember things. When I was in school, I just kept coming up with acronyms to help me pass the test or whatever the case is. So this acronym FREE represents the 4 requirements of things that you can write off for your business. So the first one of that FREE is F, which is for business. So if the expense for business, write it.
Y'all take notes.
Definitely, what you want to do, really, if you're taking notes, you want to go ahead and write FREE. So FRE, and you want to write it down like this. I'm about to give you exactly what each of those letters mean. So the first one is FREE. So it needs to be for your business, trade, or profession. And if the expense is for your business, trade, or profession, you can go ahead and do that. So, one of the example that I gave at the university was Shoshana. Shoshana owns an ice cream shop. So any that she has related to that business, she can go ahead and write off. The next requirement with the IRS is it needs to be considered, I call it regular. The IRS calls it ordinary. So it needs to be ordinary for your business. So going back to Nixon's, Shoshana's ice cream shop, if she purchases things such as a cup, such as a bowl, such as cones, that is considered ordinary for that business. It makes sense for that business. Now, if she's
Right.
here buying nails supplies, if she's out here buying who knows what plants, I got this plant
Right.
back, and it's not for decor, but just like plants, just in general, then that may not be seen as something that's ordinary for that type of business. And that's actually another thing, another gem that I want to give you too, is like that's another reason why they have when you go ahead and register your business and you put in that code, that business code,
Mm-hmm.
that business code to see, what kind of expenses, like
Are you
what.
gonna, oh,
That's another thing that happens
you're
behind.
talking about the SIC code or the NAICS
Yep,
code.
yep, yep,
That is
yep.
a gem. That is a gem. I gotta create some content about that because that you need that when you register your business. That's very key. And also on the business credit side, it's very important to choose the right registration, like the right code. I mean, because even on business credit, if you choose the wrong industry, you can get denied.
Mm,
So yeah, so that code has importance both in taxes and in business credit. So y'all write that down too.
yeah,
That's good to know.
that's key. So that's kind of an easy way that they can audit and say, wait, well, you got this type of business and you got all this money in advertising, or are you spending all this money on mileage? Like,
Right. What you doing?
so that's the thing
Mm-hmm.
that they're looking at. So that is we're at R now. So that's regular, ordinary is what the IRS calls it. The next
Yeah.
part is E. So E is considered essential, right? Essential for your business. The IRS calls that necessary. What's considered necessary to operate and run your business. So such things as like electricity, the building, utilities,
Mm.
just things to continue to operate your business in a comfortable fashion. So they kind of give you some leeway on that. They're not very specific. So if you want to be really extreme, you're like, well, maybe you don't necessarily need a building to run your ice cream shop. You can do it outside, but it's not it's not that extreme. It's necessary.
Right.
What's reasonable, really. It's really a reasonable test is what they're looking at there. And the last part of that is economical. So is it the way you're spending your money economical? What I mean by economical, the IRS calls that not lavish or extravagant. So you don't
Mm.
cheap, you don't need to be frugal, but you can't be lavish or extravagant under the circumstances. So something that would be considered extravagant is if you are if you're having a business meal, right? One of the things that you could do as a business owner is write off business meals. And if you go ahead and have a business meal, your business made $10,000, and you have a $5,000 meal because you're buying everyone a bottle of Dom Perignon or Ace of Spades or whatever the case is, and
Mm-hmm.
like a whole big like triple steak dinner, you're doing surf and turf and all that kind of stuff. Then
Right. Going
you're
all out.
yeah, you're doing too much. The IRS is gonna be like, okay, hold on, like what's going on, and they're gonna go ahead and check up on you. So recap for my note takers: free, tax free. These are the expenses, deductions that you go ahead and take. F is for business. R is regular. E is essential, and the last E is economical. All right. So remember, not economical as in being cheap, but economical as in being reasonable. All right.
Yes. Ooh, this is getting me so excited. So I have a question, right? First of all, that was gems. I need you guys to drop the gem emoji, my favorite emoji, in the
Yeah.
comments if that was all straight gems from Michelle, because low key that was crazy and I'm so excited. Like I've studied a little bit on taxes just for my own knowledge, but that is really actually fantastic and I love that acronym. So, okay, a question that I have, right? Because you mentioned earlier about businesses always taking losses at the beginning, right, of their business. So I feel like a lot of people are concerned that if they show too much profit, they're going to have to pay a lot of taxes. So what's the fine line, right? Because we want to pay less taxes or no taxes, but then too, we don't want to claim all these expenses and make it look like our business is only making, $5,000 a year.
Yeah.
So the balance, like what if our profit is $50,000, but we don't want to show that, let's say, because we don't want to have to pay a lot of tax? Like what are some ways to maybe not get around it, but minimize that without showing too many expenses. You know what I mean?
Yeah, there's a couple of strategies, and that's part of the six I was going to go over. So you have deductions. We talked about deductions in detail. Another part of that is retirement. So a retirement is another good strategy to help you reduce your taxable income. The great thing with retirement is, you know, let's say you're working with a lender, they may look at that because that's part of your assets. Okay.
Right.
So it's not necessarily, it's a deduction, but it's not an expense. So you can go ahead and you can contribute up to 19,500 if you have what's called, 19,500.
Did y'all hear that? Wait. How much was that, please?
19500. So you can contribute up. You can go ahead and contribute up to 19,500. You go ahead and contribute that into as an entrepreneur. You can contribute to like a solo 401k, similar to like a a traditional 401k when you're working your 9 to 5 or whatever. So you contribute to that. You maximize that. That can give you a deduction. That's something that you don't need a business to do on the W-2 side. You go ahead and max that out. So people keep talking about contributing to the match. The match is cool. Probably not going to get you. Most people are not going to get. If you're trying to do the 3%, most people's income is probably not going to get you 19,500. So you can go over and beyond if you're trying to use that as a way to save money on taxes. So yeah, the solo 401k. Another big one for entrepreneurs is what's called a SEP IRA. So the Simplified Employee Pension Individual Retirement Account. So you can go ahead and contribute to that. That actually allows you to contribute up to $57,000 for the year. Yeah.
Wait a minute. Okay, yeah. So then pause. So if we contribute to the, what's it, a SEP? Simplified Employee Pension?
Yeah.
Okay. So if we contribute to that 57,000, that reduces the business's taxable income.
Yeah.
But we still keeping the money though, basically. It's in retirement.
Yep. So you're keeping that money and you get the tax benefit in the year. This is another cool thing with the SEP IRA. So the SEP IRA is one of the few tax strategies that you can actually implement after the year's over. So when it comes to tax season, they're going to be looking at what your activity was for the previous year. So let's say in 2020 is done. It's over with. Whatever you did in 2020, it is what it is. So, and we're going to talk about tax planning too, and how you need to proactively think about and know what's going on as it relates to tax savings. But, excuse me, with the SEP, you can actually do that after the year is over, 57,000, or it's the lesser of 57,000 or 25% of your compensation. So whatever you pay yourself, whatever the number is lower, that's the number that you can use. And another one on both the business and the personal side is what's called the self-directed IRA. All right, so with the self-directed IRA, you can contribute up to $6,000 to the self-directed IRA. If you're under 50, I think if you're over 50, you contribute $7,000 to the self-directed IRA. And that's another pre-tax deduction that you're going ahead and taking off and writing off for yourself and potentially your business. The great thing with the self-directed IRA, a lot of people don't talk about this, but the self-directed IRA gives you more flexibility in what you can invest in. All right. So check this out. With the 401k, you're limited to what you can contribute in that 401k. So that 401k, right. You're limited to mutual funds that they give you. You're limited to what you call it, stocks and cash and bonds or whatever the case is, right? Mm-hmm. On the self-directed IRA, individual retirement account, it's a retirement account that you can create, and you can go and invest in your own stocks. You can do stock option trading in there. You can invest in real estate. You can do all this trading and investing in there and not have to pay taxes on it until retirement, because, you know, like if you think about the 401k, that 401k is going up and down or whatever. You're not getting hit with taxes every year on the capital gains.
Right.
On those. So the self-directed, it gives you the same benefit to do that. Now, if you want to get really technical in it, yeah, it does stop at a certain income level. I think it's 132,000. But, you know, if you're under that amount, if you're making less than that amount, you can take advantage of both of these retirement accounts. Yeah, and you could do both, 401k and the self-directed.
So you can, so real quick, y'all. So, okay, did you guys get all of that, right? I need you guys to drop, let me know if you took notes on that, because I'm going to do a little recap right here. So essentially, the question was, for those who just came in, I was asking, okay, what are some ways we can reduce how much we may have to pay in taxes without claiming a whole bunch of expenses? Because you don't want to do that. That's not cute, right? You want to claim what's real, but you don't want to make it look like your business isn't profitable. So Michel said that we can put it in retirement, so up to $19,500 into a solo 401k, right? Then he also told us that we can do a simplified employee pension IRA, so a SEP IRA, and up to $57,000 in that, y'all. I need you guys to hear this. $57K, period. Okay. Now, you said that we can contribute to that even after the actual year is over, as long as we do it before taxes are due.
Yep, before you file your taxes. Yep.
Okay, so
yeah. That's big money. So and this is how tax savings are calculated, right? So let's say you contributed $50,000 to a SEP. Maybe you didn't do the 57,000. Just to keep the math simple, let's say you did 50,000, and your marginal tax rate is 30%. Just by that contribution alone, that's $15,000 in tax savings. That's what that looks like. So that gem right there, that's like $15,000 of gain right there, just by that one move. That's estimated, right? It's around there, right? So you at least 4 to 5 figures of savings with that move right there.
I like that. Okay. And you do that once a year, right? You can only contribute to that once a year. Okay.
Yeah. The thing about that, the SEP, is that if you let's say you go ahead and set up and this is getting really technical, but let's say you set up like a 401k or whatever, you have to kind of be consistent with how much you contribute and how you operate that. The SEP, right. You can do it this year, you can do it next year. You say, I'm good, I don't give money to the IRS, I want to go ahead and do something else with that money. So yeah, that's the way you can do it.
And then you also mentioned the self-directed IRA, and that one is a pre-tax deduction, so up to $6,000, but you have to do that in the same year, right? So like we would have needed to do that in 2020.
Yeah.
Okay, got it. Now, can we do all of these, or is it you can only do one out of 3, or you know what I'm saying? Can we contribute 19.5, 57, and 6K?
Yeah, that's so what you can do. So you can do a combination of the 401k and self-directed. The SEP, I'm not sure if you can contribute. I don't know if you could do the SEP with the 401k. I don't want to say yes, but definitely the SEP. I'll just say for now, let's just say you can't do it for now. But
okay.
With the IRA, self-directed IRA, the 6,000, yeah, you can go ahead and combine those two.
Ooh, this is so exciting, you guys. Wow. I feel like what's really important about this type of information and just this business information in general is like, we don't always get access to this, and you guys, what I learned about Michel in our Fire Your Boss classes is that he has spent a lot of money and time mastering the tax code, right? Not all of us have the time or resources to master the tax code. So it's such a privilege to be able to be on here with him, but it's also really important, guys, if you want to have a business, you need to figure having a CPA as one of your business costs, right? Don't be cheap about this, because you could invest, I don't know how much Michel charges, but you could invest, let's say, I don't know, $2,000 to $4,000 to have a good tax person on your team, and you're saving so much money on the back end, right? So much money, because if we didn't know about all of these and our business starts making $100,000 a year, we're getting slammed with taxes because we didn't talk to Michel. Don't do that, guys. Don't do that.
It's so true, and it's again, like Ellie said. So like as a CPA, and I think I did a post on this recently, but there is actually, when it comes to the tax profession, there's levels to this. All right, like Meek said, like,
there's levels to
this tax game. So As it relates to taxes, I'm gonna give you guys some game on like how to hire a professional, how to find the right person to work with. But as a tax professional, again, my personal opinion, I didn't share the story either. So, starting off in my career, you know, I'm going to school. I went to the top 10, 15 accounting program in the country as it relates to accounting. So really good accounting school. I think 90% of the people who take the CPA in that school pass it. So it's a really good program geared towards helping you pass the CPA exam and working at one of the global accounting firms. There's what they call the Big Four. So anyways, I'm in there, you know, learning about accounting or whatever, and I volunteered for this program called VITA. So VITA is this program that people can get their taxes done for free if they make less than $50,000. So if you're a lower income individual. So I'm going through and I'm helping people with this program. I'm volunteering, giving my time for free, helping people do tax returns for free. And I was working with this couple. They had a small business or whatever the case is. And when I was done with it, they owed money. And at the end of that conversation, the husband turns to me. He's just like, well, how can I save money on taxes next year? And I froze. Like, I did not, man, it was so embarrassing. It was awkward. You know what I mean? Like, he's looking at me as the tax expert. He's looking at me as an advisor, even though he didn't pay me any money. Like, ethically for me, that didn't sit well with me. I was just like, I'm over here, you know, dealing with people's money, and I can't really proactively help them because tax preparation, there's no benefit really to do tax prep. You have to do it. I'm not telling you guys not to do your taxes, but there's not a lot of value to that. It's something that you need to do. You got to submit it to the IRS. That you need to let them know. It's just kind of like a checkbox thing. So really what I tell people is they need to find the right individual that understands and knows how to help them proactively save money on taxes, because the accounting program and the CPA exam is geared towards big business. It's not geared towards small businesses. Not there's no tax-free, there's that stuff, right? There's no whatever, like I'm telling you. No 10 tax commandments, nothing like that, right? So as it relates to the tax profession, so you have on the bottom what I consider tax preparers. The reason why I have tax preparers on the bottom is because as a tax preparer, Ellie, if you wanted to go out tomorrow and say that you're a tax preparer, there is nothing stopping you. Like, legally, you can go out there and do it. All you need is a P10. You can do people's taxes tomorrow, and you're a tax tomorrow, right? So there's nothing preventing you from preparing taxes. Even if you go on, like, if you go on the H&R Block website, you can join their income tax course, and that's kind of their entry point to be able to do taxes for people. All you need to do is be 18 years old. You don't need a high school diploma. You don't need a GED. You just take the course and right. And I'm oversimplifying it. They do have a course that really teaches you like the basics of taxes enough to be able to go through their software and, you know, work with someone on taxes. But that's number one. So you got the tax preparer. Another level above that is enrolled agents. So enrolled agents are also called EAs. So they went through a 3-part exam with the IRS in order to prepare taxes. EAs are very technically proficient as it relates to taxes, know a lot about the tax code. Very technical folks as it relates to taxes. But, you know, again, you don't need to go to school to become an EA. If you wanted to become an EA, you go ahead and go through that process, similar to, like, you know, life insurance or whatever, right? You don't
getting license, right?
Go ahead and pass the exams. You could do that. You could probably become an EA, maybe in a year, right? Or whatever the case is. So that's the EA. On top of that is the CPA. I put the CPA on top of that because as to be a CPA, you have to have 150 credit hours. That's equivalent to a bachelor's and a master's. And you have to work under a CPA for a year to be able to go ahead and get that co-signed. Yeah, so it's a 4-part exam, less than 50% of it. Yeah, that exam is no joke. That is, like, I think the passing rate is less than 50%. To pass it the first time, it's less than 10%. It's no joke. I'm fortunate enough to say I passed it the first time.
This man is a genius, y'all. This man is a genius.
So, even with that, even though I passed the CPA exam, it still doesn't mean anything as it relates to helping you with taxes, because there's a higher level than CPAs. A higher level CPAs is what I call the tax elites. All right, so this is tax elite, another acronym. So if you're taking your notes, it's ELITE. Go ahead and write that down. Boom.
Elite.
Elite. Elites. So tax elite. And these are the requirements to be a tax elite, in my opinion. Again, my opinion. You can't Google tax elite. This is my opinion. The elites, the first part of that E is education. So did they go to school for accounting or tax? If they did not go to school for accounting or tax, I would even give you business. So maybe even business. But if they did not go to school for those things, then I am questioning how committed and how serious they are to understanding that profession. Because a lot of times, again, tax prep, because everyone needs to do taxes, tax prep is an amazing hustle. And I listen, and like J. Cole said, I love to see the black man get paid. Like, so I'm all for let us see the black man get paid.
Right.
I'm all for people getting money and making money. And you got to start somewhere, right? But if they didn't go to school for accounting or taxes, that might be something that maybe something you could want to question or whatever, right? The next part of that is so legal representation. Can they represent you in front of the IRS? As a CPA, I can represent you in front of the IRS in the event that you get audited. EAs have the same authority. Tax attorneys have the same authority as well. So that is L. I is integrity. So do they operate legally and ethically, right? So legally and ethically, are they abiding by the tax code? You don't want to have no Wesley Snipes situation. You don't want to get caught up and be out here on the news looking crazy because you didn't pay your taxes. Jay-Z said,
we don't want it, y'all.
Jay-Z, Big Billy, Hove said, pay your taxes. That's hustling backwards. You don't want to be hustling backwards. So you want to make sure, go ahead and pay your taxes. It's just the cost of doing business. That's the way you got to see it. So integrity, making sure that they're doing things right, legally and ethically, supporting things by the IRS tax code, court cases, whatever the case is. The next part of that is investment. So is it going to be an investment for you? Is it going to be an ROI? Doing tax prep. L is legal representation. So I is integrity and also investment. So is it going to produce an ROI for you? Is it going to be benefit? That's important too. So I personally believe, as a tax advisor, as a tax strategist, it's my duty to make sure that you get a return on your investment. So when you go ahead and get your taxes done, that's not a return on your investment. If you get a refund, that's not a return on your investment, because your money, you just gave more money than you need to the government. So they're not doing anything for you.
Right.
One. They're just plugging in numbers, putting in software, and then maybe a refund comes out of that. Hopefully, maybe.
Right.
The investment piece is tax planning. So working with a professional to proactively look at your life, your business, and help you save $10,000 to $100,000 on taxes legally and ethically. The next part of that, elites. So recapping, so we had the education, we had legal representation, we have integrity, we have investment. So there's two-part I. The next part of that is T, so training. How much training are these individuals doing? As a CPA, I'm required to go ahead and take trainings, what's called CPE credits, so continuing professional education credits. So I gotta stay up on top of it. On top of that too, this is what I personally do. I invest my own money to invest and learn about additional things, right? So I invest in learning the latest and greatest things that are going on with the tax code. All this craziness that's going on with the IRS and the disaster relief, PPP, is it forgivable? Is it not forgivable? Is it deductible? All that kind of stuff. Like, it's always changing. And then Biden, we didn't even get to talk about this, but President-elect Biden is coming in. He wants to redo the whole tax code now. Now he wants to revert what Donald Trump did when he was in office, because Donald Trump did like one of the biggest tax reforms in the past 30 years, and we're trying to reduce taxes for really business owners and investors. Some of that trickled down to individuals, but Biden's looking to reduce that or reverse that, because he's looking to raise $2 to $4 trillion in tax revenue. He's going to do that by increasing tax rates and getting rid of or closing some of the loopholes and stuff that business owners can do. So anyways, that's training. So training is key. And the last part of that is experience. Experiences the individual have. I've been a been in the game for over 10 years, helping people with taxes, accounting, finance, all that kind of good stuff. So that's the tax elites. But definitely you want to, like, listen, y'all, you want to make sure you take this seriously. You want to work with someone who actually will tell you what you need to do as it relates to helping save money on taxes. You can prepare. Listen, I'm not, if you have a business, I'm not even gonna tell you to do your own taxes, but
Right.
you know, it's good to have someone do your taxes that's actually educated on it. But the most important piece is really working with someone on a tax plan in order to help you really have that structure laid out, set up. Because there's things that you may have questions on, but there's also things that you don't know that you don't know. I actually did a podcast. I recorded someone interviewed me for the podcast. He's working with the CPA. We had an hour-long podcast. He said I told him like half of the podcast. He was like, I told him things that his CPA never told him. Never told him. because that's because, again, just because someone's a CPA doesn't mean they're going to tell you. One, they don't know it. Like I said, I'm a CPA. I didn't know it until I, had that experience, and I was just like, yo, let me find out like what it is, because
Facts.
it's available. You can go on irs.gov and try to decipher it and try to figure it out. That's over 74,000 pages. But to really work with someone like tax experts and attorneys to really break it down for me, that helps. So that is the tax elite. So recap, just in case you guys missed that. So elites, first part of that is education, legal representation, investments, integrity, training, and experience. So you want to make sure that meets all those components. If you do that, then you're going to probably be in good shape.
I love that. So you guys, there's a lot of questions in the question box, and I do want to get to these. So really quick, I've been seeing a lot of you guys talk about saving this live. So if y'all want me to save this live, I need you guys to drop the little fire in the chat. Let's see if you guys really want me to save this live, because there's a lot of gems on here, you guys, and this has been so fantastic. So drop some flames in the chat if we should save this. All right, let me pull up this question, because this I feel like is very relevant to what's happening right now, right? So she says, or maybe he, if you have a W-2 and an LLC, when tax season comes, do they combine your income as one? I don't know. Michelle, do they put both of those incomes together?
It depends, but generally speaking, yes.
Okay.
We get into it. So I think that brings up a very good concept in conversation. So you have what's called a legal entity and a tax entity. And this is another concept that a lot of CPAs don't know and understand. So you have
get your notebooks out, because I already know what he's about to say, and it's about to be another gem. Write this down. Yeah,
this is about to be, so this is important. This is going to be key as it relates to this question. So legal entities. So you have your legal entities. Legal entities are registered with the state. So it is managed by state law. You go ahead and, like in Georgia, we filed the Secretary of State. Boom. I want to be an LLC, whatever the case is. So you have legal entities. Legal entities are going to be your sole proprietorships, your partnerships, LLCs, which is limited liability company, and corporations. So those are your legal entities. The LLC and the corporation provide you legal protection in the sense that if someone were to come sue your business, they can't come after your personal assets. So they can't come after your house, your car, your savings account, none of that stuff. They can't touch that as long as it's considered separate. A concept that's another important concept on top of that is the corporate veil. So you want to make sure you maintain that corporate veil. You maintain the corporate veil by separating your personal and your business account. So you want to make sure as a business owner, you have a business account that your money is sitting inside. You're expensing and only using that account for business purposes, and all that's organized and categorized there. So that is your legal entities. And then you have tax entities. All right, so your tax entities is actually how you're taxed. So with your tax entities, you could be taxed as a sole proprietorship, you can be taxed as a partnership, you can be taxed as a S Corp, you can be taxed as a C Corp. So with the LLC, one of the dope things with the LLC is you can actually choose how you want to be taxed. So you can make an election, an S election is what they call it, to be taxed as a S Corp, or you can go ahead and get your business registered as a corporation, or to be taxed as a corporation. So that is tax entities and legal entities. And sometimes, you know, I'll post and talk about, Sierra talks about this too, where the LLC doesn't inherently have any tax implications. The reason why we say that is because the LLC itself does not provide tax benefits per se. You get the tax benefits because as an LLC, your default setting is a sole proprietorship. Sole proprietorship you the tax benefits. So that's getting very, very technical. But that's like that's the nuance with that concept, and that's what we mean by that. So to answer your question, the reason why I said it depends is, remember, as the LLC, you could be like this to be taxed as a sole proprietorship, S corp, C corp. The sole proprietorship, partnership, and S corp are what's considered pass-through entities. So pass-through entities get combined with your personal return. It gets carried or passed through to your personal return. And that's another reason why LLCs are considered disregarded entities, because they're disregarded for tax purposes. They don't care. The government, which is the federal level, they don't give a damn about your LLC. They're only looking at the tax entities.
Right. Woo! Okay, you guys, that was very key. Okay, so having an LLC is really just the first step, right? So we see a lot of talk about LLCs. I talk a lot about LLCs and the importance of having them for the legal protection. But that next step, right, of having it recognized as a tax entity is to go ahead and file as that S corp status, right? Because you said it's a pass through.
Yes.
Pass-through. Okay. Which allows for your tax rate to be lowered, right? Because then it's a pass-through essentially to where that income is looked at as personal income, right? And not business income.
Well, so yes and no. So when we say pass-through, it just means that the profit of the business gets passed through to your personal return. So in your case, it will help you save money if you had a loss in your business, because that loss could then be applied to your W-2 income, your other income that you're making. So that's another benefit too. So a lot of times, this upcoming tax season, let's say you guys started a business, and this is a common question that I get. They're like, I didn't make any money this year. Should I file my business or do taxes for my business? The answer is like 100% yes, because that L is going to turn into a W once you take that loss and go ahead and apply it to that W-2 income. You're going to be so happy that you recorded that business, that did your business. If you're LLC, it's going to be a Schedule C on that. Right. So anyway, to answer the question, and I apologize for going that deep, but it's a very important concept, and I want to make sure that we're technically accurate on it. So if you have a W-2 and an LLC, when tax season comes due, they combine the income as one. If you are an LLC taxed as a sole proprietorship, an S corp, then yes, they will combine that. It's a separate tax form. If it's a sole proprietorship, you're going to fill out what's called a Schedule C. If it's an S corp, you're going to fill out what's called an 1120S, or whoever's doing your taxes is going to do 1120S. Those get passed on to your personal tax return, your 1040. And this is another thing too. So another concept that's important to understand is why should you switch from a sole proprietorship to an S corp? That's going to be key too. So a lot of people ask, when should I become an S corp? Should I start off as an S corp? Should I start off as a sole proprietorship? Should I be an LLC? Really, the S corp election, well, taking a step back. So as an LLC sole proprietorship, you get hit with what's called self-employment tax.
Right.
So
right.
15.3%. That 15.3% includes FICA, SUTA, FUTA, all the payroll taxes included in there. So that is the government's way of, like, let's say when you work in a W-2 job, you're paying 7.65% in taxes to your W-2 job, and your W-2 job is withholding that on your behalf. Your employer is paying 7.65%. So that 15.3 is the government's way of replicating that and having you pay that from the profit of your business as an LLC sole proprietorship. So that can be pretty significant. Let's say you make $100,000 in your business in profit. You pay that 15.3. Now you're paying $15,300 in taxes. That's how much taxes that you have off the bat. So a way to reduce that And this is another kind of going back to your question about how do we reduce how much money we pay in taxes, but still show that we're profitable, still showing that we're making money. Basically, go ahead and make that S Corp election, and you make that you elect to be an S Corp, and instead of getting hit with that 15.3 on the profit of the business, you get hit with that 15.3 on the salary that you pay yourself. That's why there's a requirement you'll see with the S Corp is that you have to pay yourself what's called a reasonable compensation.
Right.
Because let's say, for instance, your business makes $100,000 in profit, and instead of getting hit with that 15.3 on the 100 profit, you pay yourself $50,000. Well, now you just cut that 15.3 in half. Now you're paying $7,000 in taxes. So that move right there, boom, that's like a $7,000 tax.
Yes.
Yeah. So
that's so key. Wow. So should someone go ahead, like what's a good, and I know we talked about this in our Fire Your Boss class, but just for the people who weren't there, what's a good like indicator, like, okay, it's time for me to go ahead and file as an S Corp? Should it be right away? Should it be after you've made, $10,000? Like when should someone know it's a good time?
Yeah. So if you expect to make at least $50,000 in profit is the key word. Prolific profit. 50,000 in profit.
Profits, y'all. Profits.
That's when it makes sense to switch over to the S Corp. One of the things that you need to know, which you did an excellent job posting this week, is that you have to file it within the first 75 days of the year. So if it's, and this is for those of you who have already been in business. So if you were in business last year, you need to file it within the first 75 days of the year. If you started your business in the middle of the year, then you can do the S Corp election then. But if you are already a business, within the first 75 days of the year, and you want to file what's called Form 2553. So 2553 is the form that you're going to be filling out by March 15th, first 75 days of the year. And that's what you need to be doing. So that's when you should make the S Corp election. And again, you just have to really judge your business. Like I mean, typically I would recommend just starting off with the LLC sole proprietorship, kind of see how it goes. But maybe you might have a business that's like a proven business. So I had a client today that I met with, I think last week. And he has a medical staffing company. And he started his company literally in the pandemic, W-2 job, started in March, ended off the year with $3 million. $3 million, mind blown. So with a whole...
Sorry, what? He started this business in the pandemic and had a W-2 and finished the year at $3 million?
Yeah. $3 million. And so he's for...
Right there.
But this is what's gonna kill him now. So imagine he's $3 million. The profit is probably way a lot.
Yeah.
But he's an LLC sole prop.
Ah!
Yeah. So
no.
I have to do some accounting magic that's legal and ethical to reduce what he's gonna have to pay, but that's what's going on.
Okay, so so we all heard this amazing situation. There's a couple takeaways I want you guys all to take from that. But first thing is, so hypothetically, what should he have done to avoid that? So as soon as he started seeing he was making money, he should have filed as an S Corp, right?
Yeah. So this is the thing too. So remember with the S Corp, you have he should have filed. He just should have filed with the S Corp. But yeah, you have to do the first 75 days of the year. He should have originally just started off as the S Corp. I mean, it's a proven model. He scaled his business. One of the ways he scaled his business, business credit. This man used business scaled that business up to like astronomical. I've never heard of anything like that. That was a crazy story.
That's crazy. Oh, you know what? I'm gonna call you after this live, and I need you to tell me about this business because I am hyped. But listen, y'all, this is the truth. Business credit. Did he use social media? How did he monetize this? Like what?
it's just he was in the medical field, so he's a physician, so he just had the connections and it's medical staffing, and I'm starting to learn a lot more about the industry, but people out here are getting paid, like, and this is another
paid,
like, so travel nurses and all that. So this is another thing too. This is another example, right? This is a crazy story. So another person that I'm working with is actually a physician, and the physician was getting paid 1099. So they were getting paid as a business owner. The physician was getting paid $400,000 a year, 1099. Did not withhold any taxes.
This is a sad story right here.
I'm gonna try to keep it light. I'm gonna keep it quick, but didn't withhold taxes. Didn't obviously ended up with a big tax bill. Couldn't pay it. Or no, actually didn't even realize it. They just filed their taxes or whatever. Didn't realize that they end up owing taxes. Next year came, still didn't withhold. Long story short, it ends up turning into like over a $300,000 tax debt and bill. Yeah.
Oh no, ma'am.
Yeah, and this is the thing. So this is the importance. So we talked about. Did we talk about the different ways you pay taxes? So when you make income, you pay income tax. Blah blah blah. The big all is ignorance tax. Okay, and when I say ignorance tax, I don't mean that way. I don't mean that in a disrespectful way. If you look up the word ignorant, it just means a lack of information and knowledge. This man did not have information and knowledge about withholding taxes, how to make quarterly tax payments, that he needs to treat it like a business. I think later he figured out that he could switch over to an S Corp, so it helped a little bit, but that was like 3 years after all this tax debt has accumulated.
Right.
And then too, guess what? And this is another thing too, guys. You don't pay your taxes. You don't only have to pay back what you owed, but you have to pay fines and penalties and interest. So 3 years of interest on top of that. So
you guys, wow. That is not where the money resides. I just want to tell y'all, not knowing about your taxes, not knowing what to set up, withholding, all of that, that's not where the money resides. Like, this is a thing too. So the guy who opened up a business and scaled it to 3 million, first of all, that just goes to show you all that you can do this. He has a whole job. He is a W-2, right? You can start a whole business. Just start. You never know where it's going to go. But at the same time, right, as soon as you start seeing that things are going well, that you're making money, you need to be prepared for the levels you haven't reached yet, right? So you need to be prepared and be thinking, you know what? I don't know if this business is going to get to 1 million, 2 million, 3 million, but I'm going to go ahead and structure it now so that if it does, I'm not trying to go back and fix stuff later. You know, you need to prepare yourself again for the levels that your business hasn't reached yet, because if you prepare it right, you will reach those levels. Okay. You definitely will. And recognize too that with business ownership, with just the amount of freedom that comes with it, there's also a great responsibility, right? You want to be able to establish businesses that you can pass down to your children. Generational wealth is going to be created through business ownership. But if you're not getting your taxes right, if you're not structuring your business right, if you're not understanding and being stingy and not wanting to pay, or if you're, contributing to being ignorant, right? Just not going out getting the knowledge, that business is not going to survive one generation. It's just not, right? I want you guys to really understand that, not only do I want to teach you guys how to make money and take you where the money resides, but I want you to be able to have that money residing for a long, 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 long time. Right? And taxes, credit, business credit, all of that is a part of your money residing for a long, long, long time. Okay? That is so key, you guys. That is so key. Let me see. That was crazy. Oh my goodness. So, wow.
I gave 2 very real life extreme examples. Again, just really. And another thing you guys talk about, you guys do a great job of talking about in your university, is business planning and coming up with that business plan. So really seeing, okay, how viable is my business? what am I expecting to make in a year? If you have a proven business model, this man, again, I don't know. He just, again, this is another thing too. The best time to do tax planning and work with a professional is before you make income. Like that's the before you make income. A lot of people try to come after the fact. Do it before money. And to give you to make it even more transparent for you, because you guys probably may think I'm trying to sell you or whatever the case is. That's not that. If you make more than $100,000, you probably need to talk to a tax professional. If you are going to start a business or get into investing, work with a tax professional. Those three instances right there, guaranteed, like y'all need to talk to someone, because again, business, you don't know what your business is going to do. It can go up, it can blow up 3 million in 1 year. You can be in the situation where you end up owing money like this. And this is another thing too. You don't know what you don't know. Like I can think about different scenarios for you, but like there's only so much information. Like he didn't know about the withholding thing because he didn't even think that was even a thing. You know what I mean? Or, I don't know. Maybe maybe he just didn't know.
Like what? I don't know, y'all.
Or you know, it could be, but it could be like, what's the process? Do I have to get a payroll processor? Like, there's all these different nuances and things that you need to know. Like, people like talk about switch over to the S Corp, get an S Corp, but people don't understand that you need to have a reasonable compensation. How do you calculate the reasonable compensation? How do you pay yourself? How much do you need to be withholding? Who are the payroll processors to be working with? What are the other requirements for the S Corp? Because it's not just the reasonable compensation. You need to have a certain amount of. You can't exceed a certain amount of members in your company or investors. Like there's all these different requirements and things that you need to consider that you may not even think about. So really, before you make money in the business, again, if you're less than $100,000 in W-2, and I'm talking about W-2, not the business, not $100,000 in business income. Like if you're a W-2 employee, no business, but you make over $100,000, you're probably overpaying in taxes. There's things that we can do for you.
For sure.
And then as a business owner and investor, even if you're making zero money, work with the tax professional, because I did another podcast, and the guy I was interviewing, it's probably gonna come out soon, but he sells clothing and apparel, and he asked me, does he have to pay sales tax? What does he do with sales tax? I'm just like, bro, you got a whole profit service. You got like IRS is coming for you. If they didn't send you a letter, pulling up a case right now, and they're just saying, okay, let's give them 3 years. Let's see how long. Like we just go ahead and send them the letter, this $200,000, $300,000 tax bill.
Oh my God! Ooh, I'm getting stressed out just thinking about that. That is just too much. Wow. Okay, Let me pull up another question. This is probably going to be our last question, guys. But if you guys want a part 2 of this video, because I feel like this was dope. If y'all want a part 2, I need you guys to drop 2 in the comments, okay? Because I'm really feeling like this needs to be a series or something, because I mean, like, whoa, it's just amazing, right? So if y'all want a part 2 of this, let us know so that me and Michelle can get this on the calendar, okay? Yes, because I'm over here dropping business credit gems. Michelle is dropping tax gems. Like, this is some magic happening right here.
Cool.
The two of us combined. So, let me see. Oh, okay. Ooh, this is a lot of questions. Some of you guys, I'm going to have you guys DM me or email me or Michelle, right? Some of these questions.
Why that up?
Okay.
Real quick. So yes, we're gonna drop soon. I got a course. I got a whole program, Tax Wealth 101.
Y'all need to get that. Y'all need to get that.
Tax Wealth 101. I go through all these concepts and a lot more. There's hours of information I didn't even get to share on here. So make sure you guys tap in. Take advantage of that opportunity. It's super affordable. It's less than what you would pay for a tax return, and it's going to. My big promise. I like to brag about it, but you're going to walk away from that program knowing more than your CPA, more than your tax preparer. Like you're gonna be teaching them things. It's like, yeah, I took this course, and this guy's telling me about legal entities and tax entities. Do you know about that? What do you know about that? I'm gonna show you how to ask them the right questions to make sure you're working with the right professional. So yeah, all that. Go ahead and get that. The course is super easy. It's a course in layman terms. Yes, it is 100% in layman terms. It's in perfect, simple English. I'm not talking as fast. If I am talking fast, you can slow it down. If you think I'm too boring, you can double up the speed. But that's
Right.
so is Intuit, QuickBooks a good app to do deductions? Yes, Intuit and QuickBooks is a good app to have your accounting done. So I want to say deductions. I'm just and I like to I'm very specific on the wording on things, but yeah, QuickBooks is a really good app to use. There's also an app called app called Waves you can use. Another app called Zero, but QuickBooks is kind of like the gold standard because a lot of accountants use that program. So if you wanted to transfer your information or work with someone else to do your bookkeeping, most people could pick it up and get it pretty intuitive. So, yep.
Ooh, that's really good to know. That's really good to know. So that's definitely a great way for you guys to get started in terms of just starting to track things. But I think one thing Michelle said was so key, like the time to start understanding your taxes and to work with the CPA or whatever the case might be is going to be before you start really making money, right? I think that was a very big takeaway because sometimes I talk to a lot of business owners and those who want to start a business in my strategy calls. And the biggest thing they say is, you know, they're scared, they don't know what to do, et cetera, et cetera. You got to cut the fear and be ready. Okay, cut the fear out and be ready. Because if you apply the strategies we're teaching you, if you go after it, if you're consistent, if you show up in your business every day, you are going to make money, right? But you want to understand all of these things before that happens. That way, when you start making money, like again, you're not trying to double up and scramble and get your QuickBooks and calculate your receipts and take pictures and stuff. No, you need to get your business account together. Make sure you've got stuff coming out of the right place. Don't be charging things on your personal account and getting money to your personal account. Don't do that, right? Prepare yourself ahead of time so you don't have to clean up later. Okay?
Big facts. And then people are asking about other things that you can use. Really, so the all you need to know as it relates to accounting is just making sure all accounting is, the definition of accounting is just accounting for transactions. So as long as you're accounting for transactions, you could even use a business spreadsheet. Like I have an Excel spreadsheet. If you get the program, I have a business spreadsheet that literally mirrors what's on the Schedule C. So you go ahead and put that information in. And then if you do your taxes, if you give it to a tax preparer, they're going to love you because it's all organized. It's all there. When you go do your taxes, actually, you don't necessarily need to, you don't need to give the tax preparer your receipts. All we want to see is the income, expenses, profit. The receipts are for you to hold, for you to save in the event that you get audited. The IRS is going to be like, show me the receipts. That's when he said, show me the receipts.
Show me
the receipts. That's what they're going to want. So, yeah.
Okay, this is the last question, and then I promise I'm going to let you guys go. But I feel like this is relevant because I get this question a lot in my comments and my DMs and stuff. So if you have, so she's saying, my business is not registered. Can I still get write-offs on the investments I made to get started? So I would like the CPA to weigh in on this because I have my own thoughts about it, but you're the trained one. So what's the deal? Like if someone hasn't yet filed an LLC, or even registered with their county as with a DBA, you know, can the money they're spending now for like materials, advertisements, whatever from their personal account, can they write it off later?
Yeah, so I would say, so yes, you can write it off. So the requirements are, as it relates to taxes, you want to report all the income that you make, and you don't want to overstate the expenses that you had. So you have two options. You could either go ahead and write off those expenses and then be able to potentially take those losses, apply it against your W-2 income, and get credit for that. Or you don't necessarily have to. If you didn't make any money You don't need to do it. But I would say, yeah, you do want to, you want to make sure you do that. And then it kind of allows you to build some business history as well. But then even on top of that, there's one important point that I wanted to make. You don't need to have an LLC to be able to be a business. Like the LLC is the best practice. What you need to do, all you need to do is be in the pursuit of profit, pursuit of making money. You can file a return with your social security number. Not telling that, not recommending that, but you do that, and that's it. Like you don't have to it isn't, you don't do all the other stuff with it is really doing the best, the best practice, but it's not required. So that's a question I get a lot too, because people are like, my business didn't make any money, I'm not gonna write it off, or I'm not gonna report it, or I don't need to report it or whatever. So that is that's that.
That's a really good point. So just to recap, he mentioned that, you know, as long as you're in the pursuit of profit, even if you don't have your LLC EIN yet, you can write off the expenses to start your business under your social security you mentioned. Although it's not recommended, that is something people can do with the CPA's help.
Yep, exactly. So you can do it. So
and then okay, so then after they register their business, like after they get their EIN, let's say if that happens in the next tax year, then they would go ahead and whatever expenses they have at that point, they would file it in the next tax year under their registered business or EIN. But before that happens, they could do it under their social.
Yep.
Okay,
exactly.
guys, so there you go. Another example of why really, truly nothing should be stopping you from starting your business, right? Although it's not ideal to get started without, you know, LLC and all of that, definitely you can. And what you spend on it, you still can claim. You still can claim, okay? Y'all are so dope. Well, Michel, tell everybody where they can find you. I have your, you guys, his handle tag in the title at Michel Valbrun, but let them know like how they can contact you, all of that good stuff.
Yeah, so you guys can go ahead, make sure you guys follow me if you haven't already at Michel Valbrun, MichelValbrun. If you're wondering, because my name is Michel. Yes, my parents are from Haiti. I'm a Haitian descent. So ça passe. What's going on, all the Haitians? Got our percent watch out here. So Haiti's in the building representing. And yeah, go ahead and follow me. Make sure you guys tap in. Get Tax Wealth 101. I believe it should be 75% off on if you go to taxwealth101.com, or if you go to Ellie's link. Hopefully the discount is on there. And
yeah, both of our bios, guys. The Tax Wealth 101 is in both of our bios.
Okay, perfect. Yeah, so go ahead and make sure you get it from Ellie's bio. Make sure you guys get that from her bio. I think it should be the first one. If you go ahead and do that, I'll do a really quick favor for y'all. If you guys go ahead and get that tonight from Ellie's bio, it needs to be from Ellie's bio. I will jump on a 30-minute call with you, answer all your questions. If we didn't get the chance to go through all the questions, I'll jump on a call with you, 30 minutes, complimentary. You shoot me the DM, you send me the screenshot, you go ahead and do that. I will jump on a quick 30-minute call with you and answer any questions you have. So
y'all gotta do that.
Check this out.
That is so worth it.
This is facts too. If you go on the link in my bio, and try to book a consult with me, it's $250. Someone actually funny enough, I did this promo at the university. Someone didn't get the course and tried to DM me, and I just gave him a link to the consult. I was like, yo, it's $250. This is what it is. Like
it just is what it is. So it's actually cheaper for you guys to get the course from the link in my bio, and then you get the session complimentary. You just heard it from him. To talk to him is $250, but getting the course with the link in my bio is definitely less than that. So y'all, listen, teamwork does make the dream work. I love it. I definitely want you guys to conversation with him. So the link in my bio, I'll also drop that in the comments. Like when I post this, I am going to say the live. But because I'm saying it, I want you guys to take this super serious and get the course so you can talk to him for 30 minutes, okay? because I want y'all, again, to be where the money resides for a very long time. We don't want to pay $300,000 in back taxes. We don't want it. I don't want it for y'all. I love y'all too much, okay? So make sure you guys get the course. This was amazing. Thank you so much, Michel. And I can't wait for the next one, guys. So stay tuned for the next one. Follow him right now, okay?
Oh yeah, we'll definitely have to do it again. Appreciate you, Ellie, so much. Guys, make sure you guys tap into that program. Ellie's bio. Make sure you get the program. Send me a screenshot. Um, my, as you can imagine, my schedule is super busy. I'm mad book, but just go ahead and I'll jump on a call with you eventually. I've already talked to people on the program. I've already talking to people from the Fire Boston University. I had their one-on-ones. They loved it. They gave me a 5-star review. So it's not I'm not holding back. I share a lot because honestly, and this is something I got from our business partner Sierra. She was just like, I don't want, she told me, and she helped me realize, like, I don't want money to be a barrier to entry for our people. Like, the reason why a lot of us are not getting this information is because people charge way too, well, they don't charge too much. They charge what they're worth. But for us, we may not be able to invest, however much to be able to talk and work with the CPA that actually knows what they're talking about. So, I made it super affordable, super easy. There's no excuses. 2021, we're going to be where the money resides, and that's it.
Oh my gosh, that is amazing. So I just put the name of the course at the bottom, guys. Tax Wealth 101. Get it at the link in my bio, and then you'll get a free call with Michel, which is so worth it. Listen, y'all got to get this right, okay? So thank you guys again. I'm about to post this right now, and I will see you guys in the next vlog.
Bye, y'all. Peace.
Bye.